So hello guys, welcome back once again. Um, Today there are some things that I wanna talk about, and first I'll start with the technicals. Um, what here is the US 100 index? Um, this is a CFD, okay? So if you wanna trade futures like the Nasdaq and you don't have access to a futures account, just you can just switch to the US 100. Um, my data is being provided by capital.com. So I know this is not going to be in line with everybody, and this is not going to be pleasing to um all of you, but I'm just going to spit the truth here, okay? I I'd rather choose to intraday the US 100 index and not intraday the XAUUSD market, or maybe those who are working with Forex pairs, and I know others are trading those commodities there. I don't think it's a bad idea, and also those who are trading crypto, I don't think it's a bad idea, but if you want to grow on learning how to read price action with precision and algorithmic structured price action, you just have to switch back to this thing, because I know Michael was meaning something when he was talking about why he only focuses on the Nasdaq futures. um so I'll be doing intraday. I'll be taking intraday trades on the US 100, and that is what you're gonna be seeing me oftenly work with. So let's recap on today, but I'll also focus on gold, but not in a way that I wanna intraday it. Um, Maybe swing trading on it. When you catch a good move, you can just move with it and you know benefit from the move. But intraday trading gold is it's not easy, bro. You just and even other instruments like crypto, bro. You just I do not say that they are not algorithmic, but they just have that one thing. If you just think you want to do that, I'm okay with you. So this here is gold. If you have been with me and you have watched my previous videos, I was talking about this consequent encroachment level here, and also this here. I graded this week here. We did not count for that liquidity, so put it off. So I grade this. We were grading this week, and we were gonna watch how price will use those levels to deliver to the downside. Today we had news events. I don't. We had news events today. We had core retail sales and unemployment claims, kind of mid-pack event, and the other two high impact events. So those events are the for the dollar index. If you're trading the dollar index, or you're trading any pair that is correlated to the dollar, you obviously want to look at how that is doing. So what I was looking at was this level here, and I'm also taking a good look at these buy side imbalance, sell side inefficiency here. So you want to note that if you are observing very well here, that's my consequent encroachment level. So I only have that. Okay, I don't want to have the big um rectangle. I just want to have this consequent encroachment level only. So I want to observe how the market is going to treat these levels here, especially this consequent encroachment level here, because if on a kind of basis we close above it, I still believe that we are going to look for higher prices. Okay, but for now I will need to see how price will use this here, so that I know how we're gonna go about this liquidity here and this here. So this consequent encroachment level there, very important. You can also use this dealing range here that has been given to you. That's the consequent encroachment of that dealing range. You see why I'm also saying that this level is very important? Because they just look like they're on top of each other. Okay. So those levels, I say, as long as we are on a candle close basis, we are closing above this consequent encroachment level, we will be looking for higher prices. But if you close below it, that means it invalidates these being a buy side imbalance, and it gives it a chance to act as an inversion fair value gap. Okay, that means to deliver price lower. But these levels here, the dashed lines, the red dashed lines here, um those levels um are from the weekly sell side imbalance. Again, if you just watched my videos, I have talked about that. So I'm looking at that. Maybe probably when I watch how price will react on this level, that's when I'll decide on how to go about on this here. Um, we see Bitcoin reacting from this weekly sell side imbalance here. Okay, I do not touch on these because I don't trust it, bro. We have something good here on oil. Consequent encroachment level there. Still kind of looking for higher prices. Gonna use this level here. Grading this wick here. So wanna see how price will act on that, because I still think that gonna walk higher. Okay. This here, higher prices too. Looking at that level there. Involve the include the volume imbalance too there. So being used as an inversion fair value gap here to drive prices higher. What I'm simply doing is tape reading through these instruments, but I do not like trade all of them. I'm just I'm just I'm just giving out what my eye is spotting, according to what skills I've got. Okay, doesn't mean that I go ahead and trade all these markets. Mhm. So this is what I'll be focusing on here. So we reacted off this buy side imbalance, sell side inefficiency. That means it's a BC there. Okay, buy side imbalance, sell side inefficiency. So as long as you see how these candle close, this is why I want to focus on these instrument here. Okay. Um, do you see? Do you observe these candle close here? This is beautiful. It just respects these imbalance here, and it directly shows you that we are done with business there. We just gonna go the other level on the other side. So observe how the candlesticks um reacted to these consequent encroachment level here on a candle close basis. That's what I'm talking about. So we have this downside candle here. See that close there, and this one here. So that's very important. And I'm pretty sure I saw, because I'm learning from Michael. I saw him long these from these from these level there, consequent encroachment level, and it was kind of good, kind of a good trade, and it was it was perfect. Okay, that's why I'm saying apart from wanna being perfect, you also wanna make money, and for you to make money, you have to be involved with you know rather um uh, at least a readable price action, something that you can interpret, something that you can build a narrative on. Okay, so I was looking at these here. I don't know why I pointed that, but these here, not today, not tomorrow, but definitely this is an important level because it's a low. That's liquidity. So at these levels here, okay, graded that week there because it's kind of like a longer one than this one. Well, it's kind of longer than this one, so I choose it. Okay, so I'm grading that, having those levels there, and I also have the new day opening gaps there. Okay, hmm. Why you're seeing this here is because I just realized that the these index still prints after 4:59. So you see like that 1 hour gap that is there in the Nasdaq future. This doesn't have that. So I want to go to the 1 minute time frame, and also why I was also talking about ah why you should be sticking to this market is because the price action in the 1 minute time frame is kind of tricky when you begin when you're starting with it, like it's because I'm still learning on that, but um you'll have a good chance to at least read what price is doing to precision. Not that kind of precision, but it's not that perfect. But if you stick to it, you'll soon start reading this language too. So I'm still learning this language. What you're seeing with the white levels here, that's the regular trading hours opening range gap. So the consequent encroachment of that, and this is the lower level where we closed at 4:14 p.m. 4:14 p.m. That's in the evening. Remember, again, I'm using the New York Eastern Time. So consequent encroachment there, and the upper level there. Uh-huh. Just don't mind about this level there. So I still have this uh new day opening gap here. See the high and the low of it. Do you see how price is reacting off that? That's beautiful. So I'm observing this here. I This movement was kind of crazy because this is what Michael has been talking all about, saying that these kind of movements are insane, and if this kind of movement finds you on the wrong side, it will wipe your ass off, definitely. But you see how price is reacting on that level there, and this upper level here of this week that we graded there, fast reacting from that there, then using that level there. So what basically happens is at immediately price opens, the first thing that you are supposed to know is that price wants to reprice to the consequent encroachment of the regular trading hours opening range gap to the consequent, at least to the consequent encroachment of it. Then you're going to observe how it's going to treat that level, and definitely how you're gonna go about it. So I don't have trading view premium, so I don't have access to lower a lower time frame than this, the 1 minute time frame. But definitely soon we'll be there. So you observe how price is reacting off that. Taking out this here and this here. So this is Asian liquidity at nine, approximately at 8:59. There you go, 8:59. And this liquidity here at London session. So what you're going to ask yourself when you come to this market is who is making money, and then who has made money, and then you want to go against that because that's what the market maker is doing. Who made the money? Those who made the money. That's those who made the money. Those those are the people that we are targeting. So right now it's almost going to it's the launch zone, and remember at that time we also suspect that I have a narrative that price might want to come for any liquidity that was created or was engineered, sorry, any liquidity that that was engineered um after 10 a.m. Okay, so I have this low here, so I'm also kind of looking at this low with a very crinky eye. So that low there, I wanna target that. Okay. So we react off that. That's a bull flag there. So that's it, guys. I'll talk to you later. Thank you.